So I've got a question for you. Did Washington State really just trade your constitutional rights as a Washingtonian for, I kid you not, a diaper tax exemption? I have to ask you, do you know how much your state is about to actually cost you? Because while you were sleeping, the House and Senate just pushed through Senate Bill 6346, officially ending Washington's 137-year run as a no-income tax state. They're calling it a millionaire's tax, but the fine print contains a marriage penalty, a founder's trap, and an emergency clause that is designed to silence your vote. And I believe that if you're a Washingtonian, honestly, you should be furious right now. Well, I am real estate broker Leah Courage. I'm a Washington real estate advisor, and today I am giving you the forensic audit of this bill that certainly no one in Congress is willing to provide to you. And by the end of this video, you are going to understand the 4 hidden taxes that are buried in this legislation and exactly how the marriage penalty could cost you $80,000 just for saying I do. And stick around until the very end because I am going to give you an Exodus map, which is the 3 specific states that Washingtonians are moving to right now that offer a 0% income tax and possibly even better real estate appreciation than the Puget Sound. So let's dive in. So naturally, we have to start with the Millionaire math because this is where the marketing really meets the reality. So Senate Bill 6346 has officially cleared the House and the Senate as of the final days of February 2026, and it targets personal income above $1 million at a rate of 9.9%. Now, on the surface, that sounds just like a surgical strike on the ultra wealthy, but you have to look at how the math actually applies. If you make $1.1 million, you aren't taxed 9.9% on the whole thing. You're taxed on the $100,000 above that $1 million threshold. But here's the insider reality that really hits home for my clients in Bellevue and Medina and Mercer Island. And this is the marriage penalty. This is the most sneaky part of the data that the legislature didn't highlight in their press releases naturally. So in Washington, the $1 million threshold is not per person for married couples. So if you're a single person, you get the $1 million exemption. But if you are married, filing jointly, you share that same $1 million threshold with your spouse. So think about that for a second. If you have 2 single people, say, earning $900,000 each, then they pay exactly $0 under this new law. But if those 2 people get married, then suddenly they owe 9.9% on the $800,000 above their joint $1 million cap. That's an $80,000 wedding gift to the state of Washington every single year. Yikes. And also for the high-earning tech couples at Amazon or Microsoft, this isn't just a tax on wealth. It is a direct tax on the family unit in our most successful neighborhoods. So the way this bill was passed should also tell you everything that you need to know about their intent behind it. They attached an emergency clause to Senate Bill 6346. And in the world of Washington politics, an emergency clause is the ultimate get-out-of-jail-free card for the legislature. It means that the law takes effect immediately, and more importantly, it cannot, and this is very important, cannot be blocked by a standard voter referendum in November. So they saw what happened in 2024 with Initiative 2111, where we, the voters, overwhelmingly said no to a personal income tax. So by labeling this an emergency, they effectively have silenced your vote and disenfranchised every single citizen who thought the Constitution still protected their paycheck in Washington state. So to get this through the House Finance Committee, they added what I'm calling political sugar or sweeteners. So they added a sales tax exemption on diapers and accelerated the repeal of the new sales tax on certain services, not all, certain services. It's a classic bait and switch where they give you pennies in diaper savings today while building a multi-billion-dollar state apparatus that is designed to monitor and tax every single dollar that you earn for the rest of your life. So before we go any further into the Founder's Trap and the Connecticut Ghost that we have to take a look at, I need to stop and give you some very direct advice. If you are watching this and you are already planning on making a move, or if this video is the final straw that makes you realize that it's time to get out of Washington State before they tax you anymore, then please reach out to us. I'm not just talking about selling your home in King or Pierce or Snohomish County. We're experts at that, but my team and I have also built a world-class trusted partner program, whether you are looking at the 0% tax havens of Florida or Texas or Tennessee, or even if you're looking to move internationally to protect your assets. No matter what, we have a vetted network of ultra top tier agents who understand the level of service that we expect and that you expect too. So we don't just hand you off to a random name. We actually pair you with a specialist who can handle your relocation on the same forensic level of detail that we, with our team, use here in Washington. So please pick up the phone, call the number that's right down below in the description, or click the link in the description also. Let us be your global real estate advisors and help you move your equity to a place where it is actually respected. So now let's take a look at the stealth capital gains expansion known as Senate Bill 6229. So while everyone was distracted by the 9.9% headline, the legislature, of course, naturally, them doing what they do, made a move that hits at the very heart of the Pacific Northwest startup culture. So they expanded the capital gains tax to include qualified small business stock, or QSBS. So if you're a founder or an early employee in the biotech corridor of, say, Bothell or an AI startup in South Lake Union, then this is a massive hit to you financially. So federally, under Section 1202, you can often sell your founder stock and pay 0% tax on the first $10 million in gains. Washington, of course, has decided to decouple that from federal protection. They're forcing you to add that federal exclusion back into your state income, effectively hitting every single local entrepreneur with a 7% to 9.9% surprise bill upon the sale of their business. So this isn't just a tax on billionaires like Jeff Bezos, who already sold their stock. It's a tax on the next generation of builders. It's a tax on the garage startups that have spent 10 years struggling, only to have the state swoop in and take a massive cut out of the final reward. So now we have to talk about the Connecticut Ghost, because history is, as always, the best predictor of our future here in Washington. Connecticut is the primary case study for why a millionaire's tax is actually a trap. So in 1991, Connecticut introduced their first income tax to solve, like we are, supposedly, a budget crisis. They promised that it would stay low and that it was only for the top people. But since then, the median, and notice how I said median and not millionaire household in Connecticut, has seen their effective income tax rate increase by more than 13%. So when you tax the ultra wealthy, they don't just sit there and take it, they move. And according to the data from the Illinois Policy Institute, Connecticut's tax the rich strategy actually resulted in massive companies like GE and Aetna fleeing the state for more stable tax environments, which makes sense, right? And the result? Connecticut's poverty rate actually rose from 5.5% to over 8% in the decade following the tax implementation. The rich left, the revenue dropped, and the government had to come for the middle class to fill the hole. Washington is following the exact same playbook, and the machinery is already being built. So in our state, the slow drain is already starting, by the way, and I'm talking about the tech companies. So Microsoft President Brad Smith just issued a very chilling warning that we must take seriously, stating that if Washington's tax burden becomes prohibitive, the company will, quote, reconsider where they put jobs. If that isn't a giant red flag being waved furiously in the air, I don't know what is. Also, they don't even have to pack up the entire Redmond campus in order to hurt our economy. They just have to shift the growth to, say, their massive campus up in Vancouver, British Columbia, where labor costs are considerably lower. It's only 140 miles to the north, and it is incredibly easy for them to move high-paying engineering roles across the border in order to avoid this climate. So just this week, a group of 12 prominent AI tech leaders, including the former VP of AI at Microsoft, sent a formal letter to the governor, to Bob Ferguson, warning that this tax will undermine the state's AI industry. So these tech leaders aren't just worried about their own bills, by the way. They're worried about the talent pool. So top tier engineers who are making over $1 million, including their stock options, are now looking at Austin or Miami or Nashville instead of Seattle. So when the talent leaves, the job creation also leaves, and your home value is the next thing to feel the impact. So as if that wasn't bad enough, the hard truth that no one is telling you is that this tax isn't actually designed to fund schools or the mental health programs that they mention in the commercials, which we desperately need, of course. It's actually designed to build a tax collection infrastructure for the future. So right now, Washington doesn't have a Department of Revenue that is equipped to monitor personal income. But by passing Senate Bill 6346, they're actually spending hundreds of millions of dollars to build the software, hire the agents, and create the forms to track every single cent that you make. And once that infrastructure is in place, it costs them $0 to change one single line of code in the legislature. So today, the threshold is $1 million, but tomorrow it's $500,000. And then in 3 years, my friends, $150,000. The infrastructure is the real threat because it makes the slippery slope a mathematical absolute certainty. And by the way, we saw this in California with the State Disability Insurance Act. It used to be capped at roughly $150,000 in income, but they lifted the ceiling and now it applies to every single dollar that you earn. That created a permanent tax hike on doctors and small business owners who are the backbone of the economy and not just the millionaires. We also have to address the legal war that is currently being fought in our courts. You cannot talk about a Washington income tax without talking about our Constitution. So for over 100 years, the Washington State Supreme Court has ruled that income is property, and under our Constitution, property must be taxed at a uniform rate of 1%. The state is trying to bypass this, and it's calling it a 9.9% tax as an excise tax, which is a tax on the privilege of earning a high income. It is a linguistic trick that they successfully used to defend the capital gains tax, and now they're doubling down on it. So the moment that Governor Ferguson signs this bill, expect a lawsuit to be filed in Douglas or Thurston County, literally within hours. I guarantee you they've already got it drafted. They're already planning for it. The big question is whether our current Supreme Court is going to uphold a century of precedent, and the voters will, or if they will expand the definition of a taxable privilege to include your paycheck. So this is a constitutional crisis that is disguised as a tax bill, and it affects every single person who owns a home or a business in Washington state. So think about the mobility gap for a moment. A billionaire can move their residency to Florida or Texas with just a few signatures and a condo purchase. They have the resources to be mobile, but a small business owner with, say, a physical storefront in Tacoma and employees in Renton and a family in Issaquah can't just pick up and leave overnight. The millionaire tax eventually becomes a small business owner penalty because you are the ones who are stuck while the ultra wealthy move their capital to safer harbors. So this leads to what I call tax-induced inflation. So when a business owner in Washington gets hit with a 9.9% tax on their pass-through income, then they don't just eat that cost. That means they raise their prices on things like your groceries and your car repairs and your professional services. The person at the bottom of the ladder is actually the one who ends up paying the millionaire tax through a higher cost of living. It is a cycle that has destroyed the economies of New York and New Jersey, and we are just beginning to watch it here in real time. So for those of you staying in Washington and braving it out, the real estate market is going to become even more nuanced as a result of this bill. So we're seeing a shift where buyers are becoming hypersensitive to the specific tax-efficient areas of our state. We are looking at an arbitrage opportunity within our own borders. So for example, look at Camas and Washougal down by the Oregon border. You have the 0% income tax of Washington currently, combined with the 0% sales tax of Oregon right across the bridge. So that is the kind of insider strategy that actually helps people maintain their lifestyle while the state legislature is trying to claw back their earnings. So if you're braving it out and staying in Washington, you need to be in a neighborhood that has a good moat around its value, and like places with restricted supply and high demand that can actually withstand the economic shifts that this tax is going to cause. This is why our tax equity audits are so popular right now. We're actually sitting down and looking at our clients' specific situations, and we're telling them exactly how to position their real estate in order to survive the legislative storm that is coming. So I want to remind you that even our own leadership was divided on this. Governor Bob Ferguson initially expressed skepticism about this tax, noting that it didn't do enough for small businesses, or at least that's what he said in public. So when the state's own progressive leaders, by the way, are outwardly worried about the impact on the economy, then you know that the risk is pretty darn high. This is a structural overhaul of our entire tax code that is tucked under the umbrella of a millionaire's tax. They're actually using your frustration with wealth inequality to build a system that will eventually tax your children's income. It's the ultimate bait and switch, but you don't have to be a victim of this math. You have options, and you have the ability to move your capital to a place where it is protected and respected. So whether that means moving across the country line or just across the county, my team and I are here to facilitate that transition with zero friction for you. And as we wrap up the meat of this discussion, remember that the timeline is moving remarkably fast. Once the bill is signed by the Speaker and the President of the Senate, it goes to Bob Ferguson's desk. He has a very narrow window to sign it, and because of that emergency clause, it becomes the new law of the land the second his pen leaves the paper. So you are living, as I speak, in the final days of the old Washington. The no income tax brand that built Microsoft and Amazon and Starbucks is being traded currently for a short-term revenue fix. The question that you have to ask yourself is whether you want to be the one to wait to see how it plays out, or if you want to take control of your own financial destiny before the first tax forms arrive in your mailbox. And again, I'm not saying that that means that you leave Washington, but you 100% need to know the numbers, and you have got to get prepared. Now, as promised, let's get into the bonus section and the Exodus map. So if you're realizing that Washington's new tax climate is a deal breaker, like so many of our clients are right now, there are 3 specific states that are currently seeing the highest influx of Washington residents for very specific reasons. So the first, of course, is Tennessee. You've heard about it in the news, and we're talking specifically about the areas around Nashville and Franklin. Not only is there 0% state income tax in Tennessee, but the property taxes are also significantly lower than what you're paying in King County. We're seeing clients that sell a home for, say, $1.5 million in Sammamish and buy a comparable luxury home in Franklin for $1.2 million, and they're pocketing the difference, and they're saving roughly 10% on their annual income. The second state is Texas, specifically the Austin and North Dallas corridors. So while Texas has higher property taxes, the lack of an income tax and the massive corporate relocation of tech giants means that your real estate appreciation is often outpacing the Puget Sound, depending on where you're investing. And finally, we have Florida, particularly the Gulf Coast areas like Sarasota and Naples. So Florida has mastered the wealth haven model, if you will, and their homestead exemptions actually provide a level of property tax protection that Washington simply doesn't offer. So these 3 states are the primary destinations for a reason of Washingtonians. They have built moats around their economies that actually attract builders rather than penalizing them. So if you want to see a side-by-side comparison of your current Washington lifestyle versus what, say, you could have in one of these Exodus states, that is exactly what we do. So we can show you the net after-tax difference over a 10-year hold, including real estate appreciation and tax savings. And it's often a 7-figure difference for our high-earning clients. So don't let the diaper tax, as I'm calling it, distract you from the fact that your long-term wealth is being eroded by a legislature that has forgotten what made this state great in the first place. Thank you so much for watching and for sticking with me through this forensic audit. And believe me, I know this is a heavy topic, and I know that it can be completely overwhelming and extremely frustrating. And it's sometimes hard to see the forest through the trees, but knowledge is your best defense, no matter where you decide to go, whether it's staying in Washington or going somewhere else. So if you found value, by the way, in this breakdown, please go ahead and subscribe to our channel and also hit the notification bell, because we are going to be tracking the legal challenges of Senate Bill 6346 every single step of the way. And you need to be the first to know when the court rulings come down. Washington State, my friends, is changing. And you, honestly, whether it's us or somebody else, you need an advisor who is going to give you the hard truths so that you can make the best decisions for yourself and for your family. I am Leah Courage, and I truly look forward to helping you with all of your real estate needs, whether they are here in Washington or anywhere else in the world. So pick up the phone and give us a call, and let's get your plan started today. So thank you again so much for watching. Truly, keep exploring, and I will see you in our next video.